Optimism is returning to European stock markets after a stretch of uncertainty. After months of volatility and cautious sentiment, investors are finally seeing reasons to be hopeful. The mood on trading floors across the continent is shifting, as positive signals begin to outweigh the recent gloom. Major indexes are climbing steadily, reflecting renewed investor confidence. The STOXX 600, a key benchmark for European equities, has posted gains for several consecutive sessions. This upward momentum is not just a blip, it's being supported by a broad base of sectors, from technology to consumer goods. This shift coincides with earnings season, when companies reveal their latest financial results. Investors and analysts pore over these numbers, searching for signs of strength or weakness in the underlying economy. So far, these reports have mostly exceeded expectations, fueling the market's rise. Many firms are reporting higher revenues and profits than analysts had forecast, surprising even the most seasoned market watchers. Each company's performance adds to the broader narrative. Strong car sales, robust banking, and thriving pharmaceuticals all contribute. The auto industry, for example, is seeing a rebound in demand, while banks are benefiting from higher interest rates and improved loan activity. Pharmaceutical companies continue to innovate, driving growth in healthcare. When enough companies deliver good news, the market's mood brightens. Positive earnings create a ripple effect, boosting confidence not just among investors, but also among business leaders and consumers. Investors look beyond the past, using these results as clues for the future. They're searching for patterns and signals that suggest the recovery is sustainable, and that Europe's economy can weather global challenges. Strong profits hint at resilient businesses and a healthier economy ahead. These results suggest that companies have adapted well to recent challenges, from supply chain disruptions to inflationary pressures. This forward-looking optimism is what's powering the current rally. Investors are betting that the worst is behind us, and that Europe's markets are poised for further growth in the months to come. Europe's markets are finding new momentum, driven by a steady stream of positive earnings. The collective strength of these companies is creating a sense of stability and progress that had been missing for some time. The collective success of these companies is lifting the entire market. As more firms report strong results, the rally gains traction, drawing in new investors and reinforcing the cycle of optimism. Right now, Europe's economic engine seems to be running better than many feared. With businesses performing well and confidence on the rise, the outlook for European markets is brighter than it has been in quite some time. Earnings season is the stock market's quarterly report card. Public companies release detailed financial statements, letting investors judge their performance. Analysts make predictions, and the real drama comes when results beat or miss those forecasts. Stock prices often react instantly, rising on good news, falling on bad. But it's not just about numbers. Executives also share their outlook for the future. This guidance can move markets even more than past results. When most companies report strong profits and optimism, it signals a resilient economy. That's why a successful earnings season, like Europe's now, can lift the entire market. It reassures investors that the economic foundation is solid. UBS Group AG has emerged as a true standout in this earnings season, capturing the attention of investors and analysts worldwide. The Swiss banking giant posted profits that soared far above even the most optimistic expectations, surprising not only cautious analysts but also many in the financial industry who had braced for a more modest performance. This achievement is particularly remarkable given the bank's recent acquisition of Credit Suisse, a move widely seen as both risky and highly complex, with many predicting a rocky road ahead. There were widespread fears that integrating Credit Suisse would drag down UBS's profits, create operational headaches, and potentially unsettle clients. Yet, UBS has managed to defy these concerns, demonstrating resilience and strategic skill. Its wealth management division, a cornerstone of the bank's business, excelled this quarter, showing that clients continue to trust UBS's stability and expertise, even in times of major transition. Instead of losing valuable clients after the Credit Suisse deal, UBS has actually attracted new money, strengthening its position as a global leader in wealth management. The market responded with clear enthusiasm, sending UBS shares sharply higher and lifting the entire European banking sector along with them. Strong results from a financial giant like UBS don't just benefit shareholders, they also boost confidence in the broader financial system, reassuring investors and regulators alike. A healthy, stable banking sector is absolutely vital for economic growth, supporting businesses and individuals across the continent. UBS's stellar report has given European markets a major confidence boost, signaling that even in challenging times, strong leadership and smart strategy can deliver impressive results. UBS's turnaround is a story of disciplined execution, strategic vision, and resilience in the face of industry upheaval. Once facing significant challenges, UBS has managed to not only stabilize its operations but also set a new benchmark for what a successful banking transformation can look like. The bank took bold steps to control costs, streamlining its operations and integrating Credit Suisse more efficiently than analysts had predicted. This integration, which many thought would be fraught with difficulties, has actually resulted in greater than expected cost savings and operational synergies. UBS is deliberately shrinking its exposure to risky investment banking activities, choosing instead to focus on its core strength: stable, long-term wealth management. This pivot not only reduces volatility but also aligns the bank with the needs of its global client base. This strategic shift has not gone unnoticed. Investors are increasingly optimistic, as reflected in rising share prices and positive analyst commentary. The market is responding favorably to UBS's clear direction and prudent risk management. Perhaps most importantly, UBS has reversed the troubling trend of client outflows. Now the bank is seeing a steady stream of new money coming in, a testament to renewed trust and confidence from both private and institutional clients. That's a powerful vote of confidence from clients who are choosing UBS as their preferred partner for managing and growing their wealth in an uncertain world. UBS has also announced ambitious plans to buy back shares and raise its dividend, providing direct and tangible rewards to its loyal shareholders. These actions reinforce the bank's commitment to delivering value. These moves send a clear message. Management is confident in UBS's future prospects and is willing to back up that confidence with real action. The combination of smart strategy, operational discipline, and shareholder rewards has turned UBS's latest report into a true market catalyst, sparking renewed enthusiasm among investors and analysts alike. Today, investors increasingly view UBS as a model of stability and growth, a bank that has not only weathered the storm, but emerged stronger and more focused than ever before. UBS isn't the only bright spot. Strong earnings are coming from across Europe. Automakers are navigating the shift to electric vehicles while posting solid results. Industrial firms are managing costs and supply chain issues, showing resilience. Luxury brands report strong global demand, especially from Asia and the US. Healthcare and pharmaceutical companies deliver steady profits, adding stability. Even in technology, European firms are showing global competitiveness. Strength across these sectors boosts overall investor confidence. Europe's market rally is built on a broad base of success. Stock prices reflect both earnings and expectations. When companies beat earnings forecasts, investors rethink future profits and become more optimistic. This optimism spreads. If one bank does well, others might too. If car sales are strong, maybe the economy is healthier than thought. Investors adjust their models, raising stock prices across sectors. Good news increases both earnings and the multiple investors are willing to pay. As more companies deliver positive surprises, a market rally builds. Optimism in one sector spills over to others, creating a self-reinforcing cycle. Rising stock prices foster more confidence and more buying. That's how individual success stories lift the entire market. Stock market gains affect more than just professional investors. Millions have retirement savings tied to stocks. When markets rise, so do their future nest eggs. A strong market can mean a more secure retirement and greater financial stability. Rising stocks also signal a healthy economy, leading to more jobs and higher wages. Positive market news boosts consumer confidence, encouraging spending and growth. The stock market is a key tool for building long-term wealth. Even small, regular investments can grow over time in a rising market. Ultimately, a healthy market benefits everyone, not just the wealthy. The market runs on emotion as much as numbers. Confidence is key. Strong earnings reports like UBS's spark optimism and a fear of missing out. This draws more investors in, pushing prices higher and spreading confidence. Positive results across sectors shift perceptions from fear to opportunity. Investors move money from safe assets into stocks, fueling further gains. Good news changes not just valuations, but the entire market mood. A rally built on solid earnings is healthy and sustainable. As long as companies keep delivering, confidence and prices can keep rising. This virtuous cycle benefits anyone invested in the market. Tangible success, not hype, is driving Europe's rally. As the rally continues, investors should stay alert. Earnings season isn't over. Watch for results from companies yet to report. Pay close attention to forward guidance. Are companies still optimistic? Central banks are key. Rate cuts could further boost markets. Monitor economic data, like inflation and unemployment, for warning signs. Rising stock prices should be backed by real economic strength. For new investors, focus on long-term discipline, not short-term swings. Build a diversified portfolio and stick to your plan. This earnings season is just one chapter. Successful investing means staying for the whole story. The key is to remain patient and invested for the long run.